topics is CD and NCD EPS. The CD is nothing but convertible debentures, and NCD is related to non-convertible debentures. EPS stands for earnings per share, madam. So let us start with the CD, madam. Investment strategies. So CD, before we issue CDs and NCDs, we have to take approvals and we have to follow certain rules and regulations. To issue CDs and NCDs, we should have an approval from respective authorities, and first and foremostly it should be mentioned in the memorandum of association of the company. Then only we can go for a CD and NCD. What is NCD and CDs are related? The companies can raise its funds through public, including banking, financial institutions, and issue of shares. Apart from this, still company requires funds to expand its operations and manufacturing activity. They can go for further funding through CDs and non-CDs. Recently, Tata Group and Adani has initiated this action, and they have taken the CDs and NCDs. Like Adani has raised 5,000 crores and Tata has raised 3,000 crores to expand its activities across the globe, madam. So this CD is convertible debentures. The convertible debentures are related to the capital as well as shares. These debentures can be converted into shares and can be marketed in the stock exchange. The investor of CDs will have a dual benefits since he has invested in CD. These CDs can be converted into shares and whenever there is an increase in share price in the market, he can negotiate and he can sell the debentures and he can take the benefit out of it. Apart from that, he will get interest from the company periodically, monthly, quarterly, half-yearly, and yearly, as per the terms and conditions fixed by the company. So he can be safe since he is going to play dual role. That is, these convertible debentures not only provides interest, but also when he sells his shares in the market, he will be benefited. Normally, they are secured and non-secured, madam. If they are secured, the company during at any point of time faces financial losses, the investors are secured because they are backed with the assets and plant and machinery, land, etc. In the event of unforeseen situation, these CDs will be paid after selling its properties or whatever it may be, and the investors are secured getting money from the company. So these are very, very good to invest in CDs because the investor are secured either way. They will get interest as well as at the time of maturity or in the event of any losses, financial losses the company is facing. So CDs are advisable all the investors to invest in CDs. After completing or allotment of CDs, the investors will get a certificate of a CD, that is convertible debenture certificate. After fulfilling the company issue of CDs to the investors, the company has to file and pass the resolution in the special resolution after taking approval in the extraordinary general meeting. These filing will be done with ROC after issue of certificates and fulfilling all the formalities. like MGT 14. They have to fill up the form and file with the ROC periodically within the specified time by the company. This activity will be done by the company secretary of the concerned company. And when they pay the interest to the investors, they will also see all the required governing rules and regulations like TDS. They will deduct TDS and pay the interest to the investors. Finally, when they want to sell the debentures, they can sell at their interest. In their situations, permits to do this. This is a end of the CD activity, madam, right from the flow to the end. Next, coming to the non-convertible debentures. These non-convertible debentures will have its approval by the board of directors and shareholders at its general meeting, extraordinary general meeting, and it will issue only after taking the approval, proper approval. And also it will be informed to the regulatory authority called as SEBI, Stock Securities Exchange Board of India. Next, then they will go for issue of non-convertible debentures. These non-convertible debentures are nothing but they cannot be converted into shares. They are fixed and they are in the period of 1 year, 2 years, and it will last for a long period. It will be invested in the company. Next, we will explore the definitions, importance, eligibility, and usefulness of convertible debentures, non-convertible debentures, and earnings per share. Okay. Eligibility and the usefulness of convertible debentures. Eligibility typically offered to institutional and retail investors. Investors should meet the company's KYC and investment norms. For investors, convertible debentures offer fixed returns with the potential for capital appreciation if converted to shares. This makes them an attractive option for those seeking a balance between stability and growth. That means these convertible debentures are having a stability in its growth and it will be benefited to the investors. Hence, convertible debentures are most preferred to the investors as they are secured and they get the dual benefits out of the investments. Next, usefulness for companies. Lower financing costs and delay equity dilution. In the sense, when companies issues debentures to the investors in the market, they get a very low cost of interest. In the sense, for example, if they go for 10 lakhs convertible debentures, they need to pay, for example, 9%. That means 90,000 for rupees 10 lakhs if they raise in the market. And this can be delayed in dilution. Dilution in the sense when company goes into erosion of its capital, then this will come into the rescue operations and it helps the company to come out of the situation. Exploring non-convertible debentures. Fixed income financial instruments that cannot be converted into equity shares of the issuing company. If the company issues non-convertible debentures to the investors in the market, they have a fixed norm that they cannot be converted into shares in the market. NCDs are straightforward debt instrument appealing to investors who prioritize predictable returns. They play a crucial role in a company's funding strategy by diversifying source without impacting ownership. The company are safe in appealing to the investors, and the investors are attracted to the company norms and principles. According to that, investor will invest in that companies because they are rated by CRISIL and CARE, and they are in the range of double A or triple A as they are rated by the CRISIL. So these funds will help the company in the crucial time, and this funding will help the company to diversify its sources without impacting the ownership. So non-convertible debentures can be raised in the market, and these will be fixed for a period of 1 year, 2 years, or 5 years, as I already told earlier. And the investors will get a fixed income regularly, monthly, quarterly, half yearly, or yearly, and they get secured with the company, as these NCDs are secured with financial companies assets, plant and machinery, land, etc. During its unforeseen situations, the company will pay these NCDs investors. When they pay this interest to the investors, they also deduct TDS from the interest paid to the investors, and they will remit to the income tax authorities. After paying interest, they also file with the ROC as convertible debenture certificates process of completing. They have done the filing with the ROC in form MGT 14. Enable ಕೊಡ್ತಾನೆ ಕೊಡು ಇದು enable. Understanding earnings per share, EPS, a financial metric indicating the portion of a company's profit allocated to each outstanding share of common stock. That is, this is these are earnings done on the basis of the total number of equity shares divided by the total number of equity capital. So you'll get a EPC. The importance of EPC is a key indicator of a company's profitability, widely used by investors to assess financial performance. Before investing in the company, the investor will analyze in the other way, that is seeing the EPS of the company, whether these companies are rated AA, that is AA, or AAA, as rated by the CRISIL or CARE. The investor will look into all these factors, then he will decide to invest in this company. Then after investing, he will get good returns for his investments. EPS is a fundamental metric for evaluating a company financial health. It provides a clear picture of how much profit the company generates for each share, directly impacting investors' perception and stock valuation. This will be done by the company to evaluate and know what is a share per value by calculating with proper data. Eligibility and usefulness of earnings per share. Eligibility: all public listed companies are required to report EPS in their financial statements. Usefulness: it helps investors to compare profitability across companies, determine share valuation, and make informed investment decisions. So this will help the investor to look into all the factors, data, statements, whatever the company is doing it, and they upload it in the MCA as and when the period warrants them. EPS is crucial for investors to benchmark companies within the same industry and identify undervalued or overvalued stocks. It serves as a vital tool for making strategic investment choices. So, by which the investor will come to know and compare the company within the group of that companies, and he will assess himself in which company he should invest his money. Key takeaways and next steps, that is key instruments are convertible debentures, non-convertible debentures, EPS. 100% is transparency. All the instruments require regulatory compliance and KYC norms. Informed decisions. Understanding these metrics is crucial for investors. Understanding these financial instruments and metrics is paramount for both companies seeking capital and investors aiming for informed decisions. And investors are informed periodically by the company during its ongoing activities periodically. Further researches into specific company reports and market trends is recommended. They have to see every time what is going on in the market, and by which the investor will assess himself that his investments are safe and getting proper revenue or interest regularly, periodically, and without any disturbance, or is not going to face any financial loss. So it is totally backed with assets, land and machinery, plant and machinery, land. Thank you, madam, for giving me this opportunity to talk on this occasion. Thank you.